Alright, what is going on, everyone? We're back with the weekly recap and outlook video. Crazy week this past week in the stock market. Some crazy whipsaws. So we're just kind of going to break down a little bit of what happened and where we expect things to go with some technical analysis and the economic data. So, alright, so let's break into it. Alright, so here's a little bit of economic data recap from this past week. We had PPI numbers come out higher than expected, pushed the market down. We were actually pretty flat this day, mainly because of FOMC minutes. I said it in my daily updates if you keep up with those. I believe I said it in the last week as well in the weekly recap. I did not expect anything really major from the FOMC minutes, mainly because there is no expectations from the Federal Reserve. They're completely data driven right now, so as long as they're data driven, they're not expecting anything. The FOMC minutes really aren't going to be causing too much trouble besides volatility and volume. All right, so we had the main thing that we had, which was crazy on Thursday, was the inflation. All right, we had CPI data. We had core inflation rate year over year higher than expected. Inflation rate year over year higher than expected. Pushed us down tremendously in pre-market. Now, what in the world made us run all day? All right, so the stock market's been pushed down so hard for so long. Any good news at this point can pretty much spike a run, because just think about it from this point of view. You have tons of puts, people betting on the market to go down. You have tons of shorts pushing the market down. That short interest is continuing to go up, and then all of a sudden you have one good news. What happens? All of these shorts cover their positions, all these puts sell their positions, and the market absolutely squeezes. Now, we didn't see a giant squeeze, but I mean, we saw a very good, very good, decent day, up 2% from down almost 1.5% in pre-market. So it wasn't a giant squeeze, but the main news that really came out was Russia's Lavrov came out and he said that Russia was finally ready to talk about peace negotiations with Ukraine and U.S. So remember, the stock market is not the economy. If you think that, then you will lose money, mainly because the stock market is future looking and the economy is right now. So the stock market's looking, if they think about this news, then the stock market's like, oh, well, in the future, we could possibly cause supply chain problems going down, oil problems going down, prices going down, gas prices going down, causing inflation going down. So that's where the stock market is. You got that one single piece of good news, but the thing is it's possibly looking out to the future of what could happen if this is true. Now, this information may not be true, just mainly because we know that Putin likes to play mind games. He likes the disinformation and everything. It's kind of like a magician. You like to look at this left hand while he's doing something with his right. So just keep up with keep on looking out for that news and everything. But that's mainly, I think, why we really kind of squeezed up. Now, we had retail sales and Michigan consumer sentiment preliminary, so it's not like the final, but it's very important still. Retail sales came out lower than expected, pushes up. Now, that 370 on the SPY and 3,700 level on the SPX was very big. Very, very high hedge call inputs level right there, and retail sales pushed us up higher, and we got right at that level at open. Michigan consumer sentiment came out higher than expected. Good news is bad news, and rejected us hard, and that's why we really just ran down the rest of the day on Friday. Plus, going into the weekend usually is a sell-off day, anyways. So it could have been possibly also a retest of Thursday's giant squeeze up. So here's a little bit of the data that we have coming out for this week. I'm really actually eager to see the NAHB Housing Market Index, because all the housing data coming out this week is mainly for September, except this one key index. This one's coming out. This one's actually the only one for October. The forecast is 44. Last month was 46. I actually would like to see this number trend up, just mainly because we've seen these home prices going down. So it's kind of easing that housing market. So we possibly could get more sales and all these better things. So it doesn't push the market down even harder and cause a recession, easing the housing market. We also have jobless claims coming out this week. We've seen this trend in the past couple of weeks, actually, that jobless claims are finally starting to go up. Where it had this tight labor market, but it has been strong and resilient for the past 3 or 4 months, and it is finally showing a little bit of slowing and weakness. Remember, this is good because the Federal Reserve, as long as that labor market is strong and inflation is high, they're not going to pivot. They're going to continue rate hiking until we either enter a recession or that inflation goes down. So, to see the jobless claims starting to go higher and that labor market kind of ease a little bit is actually very good news. Now, we also have the Philadelphia Fed Manufacturing Index forecast is negative 5%. That's absolutely terrible. If we don't beat that, then manufacturing is terrible. We also have CB leading index forecast is at negative 0.3%. This is what I mainly want to talk about this week. This week is monthly OPEX. If you do not know what this is, you need to do some research. So, monthly OPEX or options expiration, where the monthly option expiration, they really all expire on a single day, which is, for this year, it is actually the third Friday of every month. This is big news. You could get higher volume, higher volatility, and historically, on monthly OPEX weeks, it has been very bullish. And then the week after can be bearish. So I'd really wanted to show these numbers here. Look at those puts to calls. Almost 3-1. Now tell me that we possibly could see a run up this week. Just mainly because their puts are so high and the shorts are still high. Some shorts haven't even covered yet. So we have this high short interest. We have all of these puts, and we have monthly OPEX. We could possibly we very well could stay flat this week, but I don't see that. I see higher volume coming out this week. Possibly lower volatility, just mainly because we're kind of at that level where we don't really have this insane amount of data coming out right now for this week, like FOMC minutes or anything that's going to cause this high volatility, uncertainty in the market. So we've been pushed down. We could possibly see this next little bounce. So keep a very good eye on this, mainly because historically in monthly OPEX, we have continued to ride up during the week of monthly OPEX and then been bearish the week after. So just keep an eye on this, just remember this, and we're just going to break out some technical analysis now. All right, so we're going to look a little bit here at some technical analysis. You can see right here, mainly on Thursday when we dropped down from that CPI data and then just completely skyrocketed. We hit this main trend line we've been kind of following down a little bit on the daily. That's the third rejection we had. Tried to break out there, but then again on Friday morning we had the retail numbers almost put us through, and then the Michigan consumer sentiment knocked us back down. So we had a bullish engulfing candle right here, and we did about a 50% retracement. So it could be still bullish this week if the data permits. Now looking at what happened in aftermarket on SPY, not looking too hot. We very well could have a gap up though. Just mainly watching to see what could happen. But watch this key level right here around 356, 355 level, as it's going to be, we bounced off it multiple times. Now, Apple hasn't been doing really too much lately. Remember, AMD this past week or two has actually cut their future forecast in some of their main chips and everything that actually Apple gets from. So they put they use those microchips in their MacBooks and their iPads to make them for the processors to make them work faster. So they cut their forecast by over $1 billion for this next quarter. So keep an eye on their earnings for Apple, especially going into Q4. Now looking at SPX, this actually this little megaphone this megaphone has really helped SPX in the past week. You can see right here, we bounced right there off of the bottom of that CPI data. We couldn't even push below that. And then we just completely ripped the rest of the day. Had a little bit of a breakout. I was waiting for that gap fill, but of course, Michigan consumer sentiment pushed us back down. Didn't really have anything there. And then I was waiting for that retest or that support right there. But continue to watch these levels mainly. You can take a screenshot or whatever you need to do. Now, the U.S. dollar has been raging for a long time. We're kind of on this rising wedge here, and a little bit of a short-term bear flag or a bull flag. So, just waiting for a possible either breakout or a breakdown here. So, just keep an eye on these levels. And the VIX has just been kind of, I mean, we had this double top, and then just waiting and just couldn't really break out or continue that breakout, and we kind of fake breakout and then broke down. So just keep an eye on these levels. So very well could continue to trend up this week. Just watch these mainly on the SPY. Just watch these main levels right here. If we break down, bearish. We break out, bullish. But remember, it's monthly OPEX. So historically, monthly OPEX has been bullish, and then the week after has been bearish. So just keep an eye on this and these major levels on SPX. And then if you don't forget, if you like this video, please don't forget to like and subscribe. Just thank everyone for watching this video, and just everybody have a great rest of your week and the week ahead. And let's just make some money, guys.